We have seen a full year of many new monthly paying dividend ETFs, and it's hard to cover them all. But you guys have been pointing out a couple in particular that I haven't talked about yet that we will be discussing in this video. And let me say, I am pleasantly surprised by the performance of these ETFs. It is really, really interesting how so many new ETFs are coming out. We're really going to have to weed through and find the best ones that fit our investment style. So I hope you guys enjoyed this video on $10,000 invested into ticker GPIQ, the Goldman Sachs NASDAQ 100 Core Premium ETF. Now, it's income focused, of course, but there is some crazy growth opportunity with this one as well that we've already seen even with this market downturn. So I hope you guys enjoy this video. If you like dividends, investing, making money in the stock market, you're in the right place. This is the passive income generation channel. So I hope you guys enjoy. Let's roll that intro. I do like it when these big name brands like Goldman Sachs come out with ETFs that we want. And I think they listen and they see that there's a market for these now. And that's definitely something that we as retail investors have been impacting, which I love. Now we can see GPIQ, it's got a near 10-11% yield, which is absolutely phenomenal. But what blew me away was the growth behind this ETF. So it has been trading since October of 2023, and it started at just under $39. And then it rose all the way to a high of $50.63. Only now to trail off by an insane almost 19%, meaning you're buying nearly what it started trading at. And at one point it was up 30% in a really good market. I will say it was a pretty decent market until, January, February, but still that amount of growth in that period of time is absolutely insane. Now, I wasn't specifically tracking the NASDAQ 100 at that point in time, but I don't think it was performing that well. Maybe it was booming. All in all, I like this fund. It's really interesting to see, and I love when you guys call out funds like this. Shout out to all you guys that commented. I can't even say one name because there were I'm not even joking, probably 30 people asking me to talk about this fund, to look into them, and I'm definitely glad that I did because I am very, very impressed. So we're going to do a full breakdown on this ETF today. We're going to go to their website, and then we're going to look at the dividend history. Look at the dividend growth as well, which is really interesting for a fund just like this one. And then we're going to chart 10K invested and see how much money you can make at the percentage rate we have seen. We'll do a worst case scenario and a best case scenario because this one is very, very interesting. So I hope you guys enjoyed. Let's check out their website. It's pretty boilerplate stuff. Seeks consistent monthly distributions through consistent, generally option premiums and equity dividends. Nothing crazy there. Core equity exposure with lower volatility, which what we like with the NASDAQ 100 index for calls, all that good stuff. And then we have diversifying source of income because it's delivering attractive income with the lower correlation to traditional income sources and their risks. And that's really what they have on here. I mean, there's not a ton. You have the PE ratio, which I'm not even sure if PE ratio matters when it comes to these income ETFs, but maybe it does. Maybe it does. Let me know if you guys think. I don't think it really does. Expense ratio is significantly better than a lot of the ones I've seen. 0.29 net and gross expense ratio of 0.35. Very, very solid. Not nearly as bad as a lot of others that are 0.7, 0.8, even up to over 1%, even up to 2%, which is just insane to me. And then they have the growth of 10K and yada, 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 all the good stuff. We can also come up and we can check the performance, which, it just takes us right back down. All in all, if you had invested 10K at the beginning of the fund, you'd be up to $12,069.43. Can't really complain about that. Total return, NAV, they have all the stuff on here. It's very in a simplistic format, but I'm not upset about that by any means. So, really solid fund in my opinion. We can see the rate, the 12-month trailing distribution rate, 11.19%. So it's got an 11.2% yield, which if you factor out that, what was it, 0.35, you're looking at still like a 10.8, 10.9% distribution rate, which is really, really solid. And then all the distributions that we're going to look at the chart on Seeking Alpha because I like to look at it from a third party, just because the chart is a big, big help. But very simplistic look. I mean, I don't know if there's anything necessarily that stands out drastically about GPIQ compared to some of the other ones, besides the fact that the growth has been there. So there's also, I think it's GPIX is the other one for the S&P 500. I may put out a video on that if you guys are interested. Don't forget, let me know in the comments, and that video will be coming out soon because, I mean, they're just good at what they do. You can always check the management team as well, prospectus, all the data on here. Honestly, I'm not going to read through all of this, but info and tech, I mean, it's the NASDAQ 100. What do you expect? So interesting. Apple, Microsoft, NVIDIA, same that we've seen with a lot of these ETFs so far. So I'm happy with it. Let's look at the dividend history and see if it tells a different story. We can actually see it's pretty consistent with the payouts compared to a lot of the others, and I would say it's growing. I mean, 38 cents. We did have a low one recently back to 39 cents, but it was all the way up to 44 cents relatively consistently. And I mean, just not a lot of drama. It seems to be just a consistent monthly payer, and I can't complain. That's what I like. I'll be honest. When it comes to these ETFs, I like the weeklies. They're fun to watch and track, but the performance of some of these monthly payers outperforms the weeklies. And even with YMAG and YMAX having pretty good returns prior to this crazy crash, it's nice having something that's very solidified that just does well. And again, it's new, it's higher risk because we haven't really seen the returns from these, and there's more and more and more of these ETFs coming out. So I worry that it might get a little bit saturated, but I'm very, very impressed by this. We're going to check out the dividend scorecard. We can see the dividend yield is an A+ because compared to other ETFs, and some ETFs don't pay dividends, so that's why it's very, very high, near 12%, and the growth rate of 152% is pretty crazy. But again, it's still very, very new, so that might not, I don't think that rate is going to be continuous. Then we can see, again, they have it at a higher yield of 11.82%. It is a $4.96 a year payout, and that is the trailing 12 months, which we have seen it increasing, which is an absolutely phenomenal sign for this ETF. I will say, if you guys were expecting a weekly dividend ETF video update today, it will be coming out on Thursday this week. A lot of stuff's been going on, and something got messed up with my dividends. It's taken longer than I anticipated, so we're working that out, but it will be coming out this week. Don't you worry. So, again, we don't even have a 3-year CAGR because it's only been out for under a year and a half. But I'm very impressed by the dividends and by the growth. I mean, is this going to be better than like GPIQ? Is this going to be better than the NEOS ETFs? Okay, I'm getting ahead of myself. Let's do our 10K invested calculation, and then we'll go to all the hypotheticals. So before we get into the fun stuff, I will say this is all assumptive. I don't know how these are going to perform, but it's really cool seeing how growth and dividends can impact your total investment over a long period of time. So we're starting off with our lower end, which is just the dividend yield. This is not factoring in any growth whatsoever. And I will say, they said this on the website, these really perform better than everything else in the market in a sideways market. And if you think about it, it makes sense, because even if the price is not continually going up, you're still getting some solid 11% dividends. Whereas if you're holding something like VU or SCHG and it's just not going up, it's trading sideways, you're not getting any return on your investment during that time, right? And so that is the goal behind these income ETFs, and that's what makes the distributions so powerful. So this is our average level return, basically saying that our 12% dividend, how much is it going to grow? And we can see after 1 year, it actually, boom, 12.5% total return. You're getting $1,200 a year in dividends, and your 10K has become $11,250. Nothing too crazy, but you got to let growth and compounding take over. Again, we have our monthly distributions on. It's DRIP is going, our share price, total number of shares. I'm not doing anything for annual contribution, aka we're not adding any more money to it. And our dividend tax rate is staying the same. And again, no increase yet. We'll do the increase in price next calculation. So we can see after 5 years, your 10K becomes $18,000. Total return is 80% in 5 years, which is pretty phenomenal. What, a 17% average? Can't really complain. You've also gotten $7,500 in dividends, which is very, very impressive. Then we can see 10 years. 10 years, your 10K becomes $32,000. Total return of 224%. $21,000 in dividends in that time period, which is crazy. 20 years, we're going to keep bumping it up. After 20 years, your 10K is now well over $100,000. Over $105,000 even, and your total dividend payments over that time span of 20 years is $90K. Can you imagine making $90K for just holding a stock? I can't even believe that. And the cool thing is your annual dividend income, which is this one right here, this is showing what you're going to make in dividends every year moving forward. And that is insane. To make $13,000 a year from an investment where you made 10K, you've now recouped your full investment per year and then some. So 30 years. Again, on our worst type of calculation, which are lower, even though it is, I would say it's kind of medium. It's not high risk, it's not low risk with this fund, but 30 years. Let's say you're 30 years old and you want to retire when you're 60. How much money would you have if you put 10K into GPIQ and you held it for 30 years and it averaged a return of 11.82%? Well, are you going to be able to retire on this fund? Let's find out. $340,000. That is absolutely insane. 10K becoming 340K. You can see total return is 3,300%. And over that time period, you have gotten $313,000 in dividends. And I know what you're thinking, $42,000 a year in dividends is not going to be enough for me to retire on in 30 years. And I don't blame you. But let's say you started a little bit younger. Let's say you started at 25 and you retired at 60. So you invested for 35 years. How big of a jump does this make? Almost doubles in just 5 years. And that is the power of compounding. So your 10K after 35 years is worth $613,000 and you've made $571,000 in dividends over the lifetime of holding this ETF. And your annual dividend income is now higher than the average U.S. American income for the per household, which is just, actually, it's right below. It's around $78,000. This is insane. The ability to retire yourself off a 10K investment. And again, we don't know if it's going to trade sideways, if it's going to go up, going to go down. It's all speculative, but this is insanely powerful and it showcases the ability of dividends and compounding to make you a ton of money in your lifetime. Now for the fun part. Everything is the same, except we have a 24.32% expected annual share price appreciation because that is how it performed its very first year. At the end of the first year, not including dividends, it was up over 24%. So these numbers are going to change pretty significantly. And again, this is all speculative. This one's a little bit out of reach, but it has performed really well. So who knows? Our last calculation was more of an average. This is more of a best case scenario. We see 1 year, 10K becomes $13,700. About the same in dividends, and that's going to be a reoccurring thing, right? Because the dividend yield is not changing, even though we have seen some dividend growth. After 5 years, your 10K becomes $41,000. After 5 years, a 310% return, and now you're making a little under $7,000 total, and your annual income is $1,600. 10 years. 10 years. It just goes absolutely nuts. You're now into the six-figure club after just 10 years. $135,000, almost $136,000 from 10K. Total return of 1,259%, and we're getting $15,500 in dividends. Moving forward, we're just getting under 2K a year in dividends. And it's just going to get crazier and crazier. And this is why it's so unlikely that this will happen, that they can keep up on pace to gain 24% every year, but it is fun to look at. All right, it's had a phenomenal year. We need to enjoy it while we can. I'll get comments saying, oh, this is dumb, it's not going to happen, and I'm not disagreeing. I'm not saying this will happen. It's very unlikely for it to happen, but to showcase the power this fund has shown in its first couple of years is super, super interesting, to me at least. You might not find it as interesting, and that's okay. We can see ending balance of $1.25 million. You're getting $34,000 in dividends and still only $2,000 in dividends per year, which is absolutely insane. Then we're going all the way up to 30 years. And now you might be thinking, why is our dividend not increasing as much? Well, the higher the price goes, aka the better our returns are, the less we're going to get out of this dividend yield. And so that's the counter to this, is we're not getting the insane dividend growth. But we can see you're still getting some insane returns based off the growth of this fund alone. They would really have to keep the annual dividend yield increasing by like a factor of 10 to 20 to really counteract this. But 30 years gets you $11 million at that rate of return, 53K total in dividends, and a 111,000% return. So again, unlikely, but it is fun to run the numbers and see because this thing has had a phenomenal first couple of years. I know that this ETF is probably not going to return 111,000% in 30 years, but it's fun to watch. And if you're interested in seeing all of my YouTube challenges in one place, don't forget to check out Blossom, the insane investing social media app where you can track all of my investments for free. It's totally free. The app linked down below. If you guys sign up, I get a nice little bonus that I can put into the YouTube channel, aka do more fun challenges for you guys to watch and buy the stocks everyone seems to be talking about all the time. So I hope you guys enjoyed this video. If you want to see my full interview with Ari Gutman, a phenomenal investor himself and a very big YouTuber, check the link down below, and I hope you guys enjoy that. Let me know what you think. If you enjoyed this video, chances are you're going to like these popping up on your screen right now, including the new Warren Buffett monthly paying dividend ETF based off BRK.B. Thank you guys so much for watching. I hope to see you in the next video.